Welcome back to Wake Up America. I'm Alex Kramer. Let's take a look at today's business headlines. And for a little help with that, let's bring in Executive Vice President of the Commonwealth Foundation and Fellow at Independent Women's Forum, Jennifer Stefano. Thank you for joining us this morning.
Thanks for having me, Alex. Good morning.
Good morning. All right, markets finishing in the green yesterday with the Dow coming off a solid day of earnings. Futures are down this morning, but I want to talk Amazon. Their earnings report, not exactly what investors wanted to see, with a net loss of $3.8 billion, missing the estimated earnings per share by almost 190%. Jennifer, what is hurting Amazon right now, and should investors be worried at this point?
I think there are two things that are hurting Amazon. The first is that they have some real labor concerns, and there's a lot of investor anxiety about whether or not Amazon will become fully humanized. That will cut into profit, drive up costs, and they're already, again, a push to, we have to increase wages. All businesses do in order to keep people working, to fill jobs. And then the second thing is that people are returning to their pre-pandemic way of spending money, which is in person. So a lot of that has directly impacted Amazon. That whole idea of will they or won't they, coming out of COVID, totally change habits? The consumers have said, no, we won't. A lot are going back to in-store shopping.
Yeah. How about this? This is pretty big. The U.S. economy shrinking 1.4% in the first quarter of the year. Jennifer, can you explain exactly what that means and why it is so staggering?
Right. Well, I mean, this is a big number, and it really is because of our trade deficit. We are importing more goods than we're exporting out to other countries. We're beset by supply chain issues, and one of the biggest issues we have is that we cannot fill jobs to make our goods and services in order to export them. That is continuing to be an enormous problem for the United States. So I think as we look at the trade deficit and the trade imbalance, that is going to continue to inform the economy. But there's some bullish signs, and certainly around consumer spending and business spending, that show that we still have resiliency here.
Well, is it surprising the markets closed up so much after this news?
No, I don't think so, because you know what, the tech guys, they did fairly well, minus Amazon, right? Meta came out, the former Facebook, they did well. Apple did well. You know, everybody's very beside themselves about Twitter. Who isn't, bullish on that or not bullish on that? Everyone's jumping off a bridge because, God forbid, free speech. But largely, there's a lot of investor confidence around those earning report. They really were looking at that to give it an economic indicator. They really look at the tech stock as a bellwether.
Well, I want to stick with the economy. So according to Deutsche Bank, the U.S. economy is on the brink of a major recession, but President Biden said he is not worried. I want to get your thoughts, but first take a listen.
I'm not concerned about a recession. And I mean, you're always concerned about a recession, but the GDP, fell to 1.4%. But here's the deal. We also had last quarter consumer spending and business investment and residential investment increased at significant rates.
All right, Jennifer, so do you agree with the president, or should Americans be preparing?
Well, again, most Americans have lost confidence in President Biden, and this is one of the reasons why. Last year, the feds were saying we're not going to do anything with rates. The economy's doing great. We're going to keep rates at nearly zero. Fast forward 1 year later, after promising inflation was just transitory, now we're about to go up rates again, another half a basis point. This is a shock to the system for the American economy. Now, I do believe there are some bullish things that we can look at, but there are a number of indicators, including how Americans view not just the economy, but their own personal financial outlook, that continues to decline. And the mental outlook on the economy and on our own finances can as much lead to a recession as anything else.
All right, Jennifer, I couldn't get you out of here without talking a little Elon Musk. Well, Tesla's stock price taking a major hit in the past week. Now, this appears to be in connection to the announcement that Tesla's CEO has made a deal to buy Twitter. Obviously, that is the big news. Musk now selling $4.8 billion worth of his stock. Jennifer, why would a Musk Twitter takeover be hurting Tesla's share price so much?
Well, I think investors are concerned about how he's going to finance or is financing and funding Twitter, and whether that will eat in, say, to Tesla's R&D or any of Tesla's support. So I think what Elon Musk is doing is selling off some of his stock. He's raising some capital there for himself, maybe to put towards Twitter. But I think for the long play, Elon Musk, again, he's a visionary. He's a long-term guy. He's not a quarter to quarter, let's get worried too much about earnings. And I think this is why he's able to drive these companies to such success with such innovative ideas. Investors would be good to take a page from his outlook.
Yeah, great point. Jennifer Stefano, thank you for joining us, and have a good weekend.
Thank you. You too.
Thank you.
Hey, I'm Rob Finnerty. Thanks for watching. If you enjoyed this video, please join the conversation in the comments below. Don't forget to subscribe, too. Hit the bell icon to be alerted to breaking news. And remember, there's a whole lot more on Newsmax TV, America's fastest growing cable news network. Newsmax TV, we're real news for real people.